Now, all of the trading advice you actually see online is absolutely use the smart money concept, use Fibonacci retracements, have a 1:5 million risk to reward ratio on $100 account to make $1 million in a single week. Cut all of those things out because all of those things are indeed important only to people who can actually read the chart. In this video, I'm going to be showing you how to read the Nasdaq chart whilst doing our Nasdaq weekly analysis as usual. But before we get into all of that good stuff, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. Why? Because when we hit 10,000 subscribers, I'm going to be doing a little giveaway, finding 10 different accounts and giving 10 different people free mentorship, right? You don't want to miss that. So we're obviously in the post NFP, period, and we want to know where the markets will actually go from this particular point where they are. And unemployment data came out as 3.9, whereas the previous data was actually 3.8, and that increased, right? So we want to know where the market is actually going to take us from this particular point. Right now, we're going to dive onto our charts and go obviously to the basics. You know that we want to check out our investing.com. First of all, to check out the news events that we actually have for this particular week. I know that after NFP, it's going to be CPI as usual, and CPI is the most deadly, second to NFP, right? So we can see that we have PPI on Tuesday, and then we have this, Fed manufacturing that is not as, volatile as CPI and NFP. So we want to be careful on Thursday at 3:30. If you don't know how to actually trade news, it's best to just stay out of the market when all of these things are happening, right? So that's it. We're just going to be careful on Wednesday because that's when we actually have, something to be careful of, right? So right now, as we go onto our Nasdaq chart over here, you can see that we had a beautiful trade on Nasdaq. In fact, we had beautiful trades on Nasdaq this particular week, right? If you did watch the multiple, take profit strategy that I used to write down this, movement over here, and all of this was in the previous weekly analysis, which played out absolutely lovely, right? And then this is the NFP, trade that we actually took. No, the take profit wasn't to the top date. I think it was somewhere here, right? So post NFP, we want to know like what is happening in the market around about this place. So we're obviously going to start by deleting all of these things, and then we go to our daily time frame for obviously the top down analysis. As we can see that the previous zone that we had spoken about in the previous weekly analysis where we wrote down this trade, I don't know if you guys remember, we took the selling positions that week for this one, and in this current week we took these selling positions. So this zone that it had broken, right, you can see that the market has gone back to that particular zone. But let's just take into consideration the second zone that it has over here, right? As you can see, it wasn't just like a straight zone. It was kind of like a little zone that it was having right in here. So this zone, it has gotten to that zone, but we also have this little zone over there, right? And we can see that the market was on an uptrend, and it kind of like broke the first resistance, second resistance over here, and then it didn't keep going down, but then we could consider that like a reversal, right? So if we go on to our 4-hour time frame, a lot of you should have heard this particular statement that if you cannot identify liquidity in the market, right, you are probably the liquidity, right? So this zone over here, we could have considered that as a liquidity zone, right? And then we rode down with it, and then you can also see on that zone we had a second liquidity zone, right? Because the market was touching the zone going up the zone, and it was also touching the second zone going up, and then it finally broke the second zone and we rode the trade down, right? So all of this we're going to ignore because we want to trade on the lower time frame. So let's start by identifying our liquidity zones, right? We have this zone over here, which was the retracement zone that we had last week, right? So we wrote down the sell over here, but you can see that the market has failed to retest for the third time, like triple top, as a lot of people would want to call it. I heard this other guy was like, so you think the market makers will literally sit down and say, oh, so right now the formation is a triple top, so let's go in the direction of a triple top formation? No, they don't do that, right? So obviously you can see that it failed to break out, and then right now as we have a breakout, we actually took this particular trade with the inner circle on US 30, right, on Friday. That was Friday. So you can see that we had the exact same thing. It broke out of this zone and it came to retest the little zone over here. So we're obviously using a 15-minute time frame. You see it broke out for NFP, we hadn't caught, I didn't catch the NFP signal with the inner circle, right? So I gave them a post NFP signal, right? So it had broken out of that zone, came back to retest, and then we took a buying position right over here. So we had 20, 40, a lot of pips right over there. I think our third take profit was hit because we were literally scalping this thing on, you know, the 15 and 5 minute time frame. So we took all of these pips up until the market, you know, was about to close. But that's not what I'm talking about. So I'm saying, if we go onto our 4-hour time frame, right, so we can see that it's the exact same thing that has happened on Nasdaq, right? So it broke out of our zone, it kind of like retested. You can see that this is a retest if you go down to a lower time frame. So if you were looking at the market on Friday, you could have taken this as a buying position because it broke, closed outside of it, retested, and then you could have bought at this zone and want to ride it to the top. But then the question now is, where are you riding it to, right? Because you don't just go into the market without an idea of when you're going to exit, right? So obviously it has already gotten 2 hours point of interest. You obviously know that if the market breaks out of a certain zone, it always has to retest that zone, and then there's a higher chance that it will reject at this zone and go down, or it will fail to reject and go up. So there are always going to be, you know, two possibilities, right? So that's what we're looking at this zone. So if you are in the buying positions, this could have been your first take profit, right? So this is already the weekly analysis, mind you. You would have already had the first take profits right over here, right? So we are saying that the market does not have only one resistance zone that it had. It has a second resistance zone right over there. So if we go onto a lower time frame, right, you can see that the market got to this zone and then pushed the market with so much momentum down to the zone. And then you can see it, the buyers tried to step in, and then the sellers were pushing it down, and the buyers, you know, they're trying to push the market to the top, but they're failing. So we have buyers and sellers at this exact resistance zone, right? So now the only thing you have to wait for here is price action. You want to see a bearish engulfing candle or a breakout of this zone, then you know that you're adding positions if you had buying positions to this zone, or you're entering your buying positions and riding it to the next level that we had. But if you see selling momentum, you won't sell at this zone. You have to wait for it to break this particular zone right over here and then ride it down to the next level. But overall, right, if you're trading the lower time frames, you're going to be biased to buying positions, and if you're trading the higher time frames, you're going to be biased to selling positions, because on the higher time frame, it is a retest of a broken zone that it had, right? But on lower time frames, you can see that on lower time frames, there's a possibility that it can break out to go and complete that retest. So you can be one person that waits for the market to go and complete the retest and then go in for the selling positions after it has completed, or you'll be that person that wants to go with the market to complete the retest, right? So over here, if let's say you are in the buying positions, you're going to make use of your trend lines too, you know, drawing them like this. You see, this is a full candle. Normally, if you see full candles like this without a wick, there's a high chance that the market wants to come back to, oh, it has a wick, right? No, it doesn't have a wick. It's a high chance that the market wants to come back down to, you know, to cover up this little, I don't know what I can name it, but then I've noticed that a lot in the market, right? But then we can just take, for example, that as our trend line, right? So we're saying that if the market comes down to the zone, we want to look for, you know, probably potential breakouts, and then it will come back to this zone, and then we want to look for potential buying, you know, positions at this zone, or buying positions as it breaks out, and we'll keep doing the exact same thing if it keeps breaking out to the top right over here. And if it breaks out of this last zone, right, you already know that it's going to ride it right to the top, because look, our zone over here will now be a lot of liquidity zone. Those will be like equal highs that are mad equal highs, right? You can see that if the market then comes to that particular zone, if the market then pushes up to this zone right over here, there is a low chance that the market will be able to hold this whole push just like that. That will be a big impulse move, that it will come back right to these zones. And if it does that, we're going to expect a breakout. But then all of these things cannot happen within 1 week, right? Unless the CPI would have been just mad, we just push the market right to the top, you know, like that there, right? So yeah, that's it for our weekly analysis. That's our usual way of analyzing the charts. We understand what we are reading. There's a breakout, we want the market to retest. If it fails to retest, then we want to look for the entry positions for our buying positions. But if it does reject at that particular zone, we want to wait for it to reject into the next level, and then, you know, go and look for potential, you know, buying positions at the specific bank zones that we'll be having in the market, right? This one is pretty straightforward, not so complicated. We want to be careful on Wednesday when we have CPI. that is probably what is going to actually push the markets on Wednesday, right? So Mondays are trap days. Tuesdays will be good to look for potential entries, and always remember that you want to trade Nasdaq within the session to maximize, potential setups actually playing out when the market is a little more volatile when you are trading with the market makers, right? So if you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'm out. Peace.